This session will review how HUD uses the VMS, the Voucher Management System, cash management, administrative fees, annual budget authority, the two-year tool, VMS, and other various reporting that is on the VMS. The first topic we're going to cover is how HUD utilizes the VMS. The VMS uses include cash management, administrative fees, HAP budget, the two-year tool, as well as other HUD initiatives. In regards to cash management, it includes determine monthly disbursements from HUD. It's based on valid prior month HAP expenses. The administrative fees are calculated directly from the VMS. HUD will advance the administrative fees and reconcile with the PHA quarterly as well as annually. The annual HAP budget for the following year will be calculated based on the validated VMS data. The two-year tool will be using unit months lease and restricted net position from the VMS, as well as HUD will be tracking other initiatives internally from the VMS. The flow of information from the PHA would generally be created from HUD Form 50058, the General Ledger, and other PHA reports. Depending on the Housing Authority software, it will gather this data and produce a VMS report. This data would then be entered into VMS, and the two-year tool will extract this data from the VMS, such as HAP and unit months leased. Cash management is how HUD will disperse HAP funds to the authority. Starting in 2005, PHAs were allowed to accumulate excess HAP in their restricted net position to pay for future HAP costs as well to pay for prior year HAP costs. This amount exceeded $1.5 billion in fiscal year 2012. Since these reserves accumulated very high, there was two changes that came out. First, HUD instituted cash management. Those procedures are outlined in PIH Notice 2011-67. That notice also established the HUD held reserves. Now, the amount of HAP disbursed is based on validated HAP expense reported to VMS and includes an inflation factor to arrive at the total monthly disbursement amount. As I mentioned, prior to the implementation of cash management, the Housing Authority received approximately 1/12 of their funding each month. When HUD implemented cash management, HAP funding is going to be received to pay for the upcoming costs for the month. Monthly disbursements are based on HAP expenses reported in VMS and RMP calculated by HUD. In this pre-cash management example, if a PHA was awarded $1.2 million in annual budget authority, then the PHA will receive approximately $100,000 per month for 12 months. Any HAP funding the PHA received from HUD that did not get paid for either HAP, UAP, or FSS escrow deposits will be held by the PHA as RMP or restricted cash. The RMP restricted cash can be used for future HAP, UAP, and FSS escrow deposits. In addition, the RMP restricted cash is the only source of funds that can be used for prior year HAP costs. HUD will now use the latest validated HAP expenses in VMS to determine the HAP funding to be dispersed to the PHA. For an example, HUD will use the total HAP, UAP, and FSS escrow expense in October and inflate by a percentage, typically about 2%, for January's HAP funding disbursement. The original cash management notice was updated via PIH Notice 2017-06. This notice revised the cash reconciliation timeframes and provided additional guidance to moving to work agencies, MTW agencies. This notice replaced PIH Notice 2011-67 and will remain in effect until superseded. HUD now has more flexibility to choose what months it will analyze to determine HAP disbursements to PHAs. For an example, HUD may use HAP expense and leasing data to disperse October and November HAP funding to PHAs. HUD will closely monitor the restricted net position for front-load requests of additional HAP funding for the PHA. HUD performs a review of the PHAs. Any variance of 3% of RMP, HUD may require the PHA to reconcile that variance to receive additional funds. So VMS reported restricted net position versus HUD's calculation of restricted net position must be within a 3% range. HUD performs a semi-annual and a final HAP reconciliation to determine the amount of excess restricted net position subject to offset or underpayments due at the end of the calendar year. HAP disbursements are reduced by the amount of HUD verified RMP. HAP funds obligated that are not disbursed as of December 31st will automatically be transitioned to HUD held reserves, meaning your annual budget authority will be transitioned to HUD held reserves, and this funding can be used next year for future HAP costs, subject to any possible offset of funding. These reserves are cumulative from year to year. PHAs whose monthly HAP costs exceed disbursements from HUD may submit a request for additional advance or front load from their FMC analyst, Financial Management Center. The request should include leasing and expense data for any months not yet reported in VMS and the PHA's projected HAP costs for the applicable month. Advances are limited to funding available, which includes annual budget authority and available HUD-held reserves. If there's not enough ABA or HUD-held reserves to support the projected HAP cost for the year, the PHA may be eligible to receive shortfall set-aside funds, and that is published each year in a PIH notice. In calendar year 2021, it's in PIH notice 2021-10. Please select next on the player and answer a knowledge check question.